All right, good morning, Checkmate crew. It's 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this Wednesday, February 8th, 2023. Yours truly here, Mickey Blindside with your market memo. Okay, so yesterday I talked about potential dash for cash. We talked about two charts of the day, ZF, which is the Treasury 5-year futures futures bond price, as well as TNX. All right. I actually think there is another even more forward-looking indicator than this. This was all to see if there was going to be a dash for cash scenario. And let's talk about that for a second here. So we might see, and again, I said the third chart of the day, if you could fit it in, was CEW, which is the emerging markets currency ETF. I actually think that if we see this break down a little bit, we might see an emerging market dash for cash. I don't think it's going to be as big as what we saw in 2022, at least not yet, but I do think that at some point that, we might see this little mini dash for cash happening possibly around March or April. But I think we will see it in one particular emerging market currency pair first before anywhere else. And I have my reasons for that. And let's go over that today. Today, I think the chart of the day today is the US dollar Indian rupee pair. Okay, the Indian rupee pair. Right now, there's a lot of fund flows in and out of India. Actually, here at Checkmate Trading, we talked about India when we talked about our emerging market thesis. So the emerging market thesis here is that we're going to see a bigger dash for cash, starting with the emerging market, something that we saw in the late 90s during the IMF Asia financial crisis, except this time inflation will come back with it. And so that's why I think at the end of 2023 into 2024, we're probably going to see a deeper recession then. Okay, I don't think right now there's a whole lot of talk about the recession happening in the first 6 months of 2023. There's no data to suggest that. However, end of 2023 into 2024, it's a little bit of a different story. But I think we're going to see periods of dash for cash happening starting from the emerging markets. And what we talked about from before was that India was one of the stronger emerging market countries as far as looking from the data is concerned. So if we start seeing a dash for cash starting in India, which is the strong one, it's one of the strongest emerging market countries, then what do you think is going to happen to some of these other ones that are not as strong as India? Okay. So when we see this dash for cash, we're going to probably see the whole emerging market go after U.S. dollars to pay for debt servicing, to pay for commodities. So if the strongest of them starts doing this, again, I think the thesis here is that all of them are going to start doing this. So here's the level right here. Actually, I drew my lines right before I got on this live session here, but it looks like TradingView deleted my lines. I don't know why it does that. Sometimes it does that, and it's not until like 2 or 3 times after I put it in, then it saves it. But I'll try to get this saved. But right here, I had a line right here around this 83 zone. I think if it breaks out of that 83 zone, and it keeps going up, and I think that will be our forward-looking indicator for a dash is cash scenario. I wouldn't be surprised that if the Indian rupee breaks out to the upside right here, we might see the other indicators also turn. ZF will probably start breaking down. All right. I think so. I think ZF will start breaking down. We'll see a dash for cash happening there too. At the same time, I wouldn't be surprised if TNX spikes up, the 10-year Treasury yield. All right. And with that, the dollar, all right, the dollar is going to probably go up as well too. We'll see a dash for cash happening. And at the same time, we'll probably see a risk off in risk assets. All right. So chart of the day, again, US dollar, Indian rupee. I'm probably going to be watching this chart with the ZF futures, the Treasury 5-year futures, TNX. and also CEW. So, those are really the big themes here. And I think those are the really forward-looking indicators. The most forward-looking one, I think, is going to be the US dollar Indian rupee. So if you had to choose one chart of the day, it'd be this one. All right. So I wanted to go over that too. I see somebody on Google chat, Anand Patil, 79 this month expiry. I don't know what you're referring to. So if you want to explain what that means, you can go ahead and put that in the chat. But anyway, let's move on. So that is the emerging market currency thesis. Let's actually take a look at EEM. EEM is very, very China heavy. So it's going to look, the recent strength is really high because, I think it's like more than half China. Speaking of which, how is China doing? Let's look at the Hang Seng. The Hang Seng recently, there's a lot of these names like Baidu and all these Chinese names that mentioned AI, and, they rose up. I think Baidu is up like 20-something% or something, right? Yeah, it's it's up a lot in the last couple weeks. They're coming out with their own Chat GPT competitor. I think it's called Ernie or something like that. How is the Australian dollar doing? Let's actually, we haven't seen that one in a while. Australian dollar still above. I mean, it's still quite strong. I think, in order for this, if it starts breaking down though below, our levels. And again, the trading view deleted my levels here. Let's see if it's on my Thinkorswim. Thinkorswim also deleted it too, so I'll have to redraw that. But yeah, if we had our levels drawn out in our market memo. If it gets below those levels, yeah, I mean, then in that case we might see a pullback. And if we do get a pullback, I'm still very interested in buying ZTO. If the Australian dollar pulls back, holds our levels, and at the same time this pulls back, would love to get to ZTO. And so that my plan still hasn't changed on that. I think if I remember correctly, I think the Australian dollar level, AUDUSD. What's this? Australian dollar. Yeah, I think it was 6.4. Yeah, it was right here. So as long as it holds above that 640 level as it dips back, I'd be willing to buy a swing trade on ZTO. We'll see if we get there or not. Speaking of the dollar, if the dollar going up, let's just take a look at the dollar chart one more time. If the dollar keeps going up like this, hey, we might see a little bit bigger correction in precious metals, please. I would love to see this pullback. Really would love to see this pullback. GDX, for those metal miners, we're trying to get in on those metal miners. GDX, I have some levels here. GDX is very interesting. I'm willing to, I want to go long if this thing gets actually to this trend line. So I'm moving up my levels a little bit. If it hits this green trend line, and this green trend line is actually anchored to this point right here, it's the July 25th anchor. If you look at July 25th, I believe it was actually based on the gold market. Let me see. July 25th was right here. Yes, around here. So it's based on it was based on those transaction zone right here. There was a lot of activity around that. I saw some at the time. It was some block orders and big orders even in the gold futures market. So I anchored it to that point. I also there was also some buying big block trades in GDX here in December, and some big fund flows happening. But overall, the fund flow has been kind of light. It was just heavy on those two particular days. And so I anchored those points, and that became my trend line here. So if it gets to that trend line, I'm willing to start nibbling on some longs right there. I also have a red line right here around the 30, let's say 32, 32.20, 32.30 zone. And there, if it gets up there before it gets to my green trend line, I'm willing to short actually GDX right there. So I'd probably buy some put spreads that are like about 1 month out if it were to get to here first before getting to my trend line. So we're going to play this two ways based, depending on what the market does. So that's my new level to short, actually. So now I have a long plan and a short plan. The long plan, though, if it gets to this point, I will look at to see which miner I want to get into. So GDX is definitely a candidate. Of course, my favorite candidate, though, is SILJ, which is the silver junior miners. And hopefully by the time that GDX gets to that upward green trend line, perhaps SILJ will be closer to about $10 a share. And if that's the case, I'm going to go with SILJ. But I will be going in with at least the 1 year, 2 year leaps, the January 2025 leaps, in the money leaps calls. Okay, that's how I'm going to go long. But again, going short GDX, it's going to be when we hit this red line again, 32.30, 32.20 or so. And I'm going to be buying put spreads, verticals 1 month out. Okay. Overall, medium term, I am bullish on GDX, but short term, if it gets to there first, I'm looking to short. Okay. Gold is another good prospect. Barrick Gold, it's another good one to use. So again, and if it gets to our upward green trend line, if GDX gets to our upward green trend line and gold, Barrick Gold is at around 1650 or lower, then hey, we'll go with Barrick Gold. So those are the three plays that you can choose from. All right. Well, that's what I'm going to be choosing from. Those are the three I'm going to be choosing from. All right. So that's that. All right, let's get to crypto. All right, as always, we like to take a look at crypto, what's going on. Let us take a look. Let's take a look and see. I want to first take a look at the open interest. I actually didn't get to check this before checking with you all. So I'm looking at this for the first time today. Look at that. So 6.1. So we're seeing the Bitcoin. Yes, this is Bitcoin. So yeah, we're seeing Bitcoin open interest on options going up. And for the trades, it's as always, it's heavily more on the call side, with the block trades, more calls being sold than bought. But when it comes to regular trades, more being bought than sold. So call diagonal calendar spreads for the regulars, and call spreads dominate on the blocks. Okay, so call verticals and diagonals. That's what we're going to be looking for on the Bitcoin side. Let's look at the ETH side of things. On Ethereum, it looks also like open interest is going up too, just by this graph right here. I'd like to see the number. Let's see here, 5.3. So it is. Oh, it's creeping up. It's creeping up. And let's take a look at the trades versus block trades versus regular trades. So it looks like regular trades, most of them are singles. Most of them are singles, call sold or call bought, it looks like. And for block trades, it's mostly calls bought on Ethereum and puts sold. So a little bullish. We're starting to see some bullish options action on the block side on the Ethereum options chain. Interesting. Mostly call spreads. So buying of call spreads. Perhaps buying of call spreads, call ratio spreads. There's some ratio spreads out there right now. Interesting. Very interesting on that. Actually, let me just go back to Bitcoin for a second here. It looks like also here, regular trades is also one-off. So call sold, call bought. So typical retail, just one leg at a time. And block trades called sold. Most of it is that. So okay, so we're looking for call sold, call spreads sold, or call diagonals for regular combo. But regular combo is a very small piece, so I'm not going to be looking for that. It's really call spreads and call diagonals. Call diagonal, call spreads. Okay, so sold, but on ETH it's being bought. Very interesting. Let's take a look at those block trades. ETH, sure, let's go ahead and take a look at ETH first. On ETH, let's take a look at the skew. Forward skew for, this is for tomorrow. Yeah, tomorrow we got some forward skew, but then backward skew for everything else. Probably retail gambling on 1 days, the dailies, and then institutions hedging for their longer term holdings. If I had to guess, that would be what I'm guessing. We're also seeing IV. IV is just in a box. Okay, let's take a look at those block trades. So we're looking for those calls. Yeah, look at that. Oh, look at those block trades. More and more block trades. Look at that. You know, we've been noticing this for a couple of weeks now, guys. More and more block trades. 202, 157, 145. This looks like one pair right here. Sell, buy. Selling puts to buy calls for June. And this is after supposed the Shanghai upgrade. So are we starting to see that Shanghai upgrade risk taking? We might be seeing that already. Remember what happened with the merge back in September? It was buy the news, and it was buy the rumor, sell the news. Remember? So are we going to see something like that? We might. Who knows, right? Okay, so what else? 202, 205 right here is a sell, buy again. Selling puts to buy calls. Selling puts to buy calls. Selling puts to buy calls. Okay, so Ethereum getting bullish. We're seeing that. Selling puts to buy calls. Big block trades happening right there, as was suggested by the previous page's data. Let's take a look at Bitcoin. Find this all very fascinating. Just like we said last year, it's just more and more institutions, I think, are getting involved in crypto. Crypto is now, you have to say it is. It's an asset class. It's a valid asset class now. With Bitcoin, it actually looks like we're seeing more forward skew, not only for tomorrow, but also for 2 days later. And also backwards looking skew for the rest. Also, IV is also in a range. Let's take a look at it. It wasn't, now I remember Bitcoin's was not as bullish. But it is bigger though. The block sizes are bigger. Let's see here. Yeah, this is actually buying a call spread. This is a bullish trade right here. They bought the 26,000, sold the 30,000 for March. So that's a bullish bet, unless there's something else paired with that. I don't see anything. 14.59.54. So yeah, that looks like a call spread. Buying a call spread. 11.52. Is there anything that pairs with that? No, but I see lots of nines. 9.15.31 right here's a spread. What is that? Buy, sell. Buy the 17,000, sell the 30,000. Okay, so it looks like buying of call spreads. Unless there's something else paired with that. 907.55. I don't see anything else paired with that. I'm sorry, as a non-Deribit account holder, this is the only way we can track data on Deribit. I was going to open it up through one of my entities, but now they don't even allow US entities anymore. So, oh wow, this is the only way we can do it. So sell, this was a sell 19,000 calls and buy the 21. So this is a call spread. So this is actually a call credit spread. Somebody is actually selling premium on this, and it looks like, hey, I mean, it looks like it was way in the money. So you know what? This one actually might be a closing order. I mean, I don't know anybody who would sell unless they're super, super bearish. But then why put up? Why have to put up more collateral? I believe on Deribit this is more collateral. Correct me if I'm wrong. For some of you that have Deribit accounts overseas, correct me if I'm wrong. But I believe this would actually take more collateral than actually buying a in the money put spread. If I remember correctly. I might be wrong on that. Okay, so this might actually be a closing order. So some of the bigger block trades in Bitcoin actually look like they're bullish. All right, but still in Ethereum, it looks like it's super bullish. So we'll see. We'll see if we start getting some news and rumors for the Shanghai upgrade. And if you guys know, I know some of you guys follow that the Ethereum developers more closely. So if you guys want to comment on our Discord or let me know through DMs, what you find, I'm always open to listening. All right. Any questions, comments, rude remarks, anything you guys want to see? Going once. Going twice. All right, then in that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back on tomorrow, Thursday, 30 minutes after the opening bell in New York Stock Exchange, 10 a.m. Eastern Time. I'll see you guys then. Trade safe.